sometimes trading your plan and getting the wins you want isn't beautiful. Sometimes it's a little messy. And this is a great example here today of how this was the case for me in trading the ES futures. So I've got my 15-second chart of the E-mini S&P 500 futures, March 2023 contract up here. And I have a bunch of other time frames that I study and look at ahead of that. So I start with the weekly, the daily, the 60-minute, the 3-minute, and that's what gets me down to the 15 seconds. So I don't want you to think that I just open up my charts and start trading a 15-second chart willy-nilly. No. So let me kind of just give you a quick tour of what my perspective was, and we're going to look at my trades for today. So on the weekly chart of the E-mini S&P, I could see that we lifted off from last week. It's pretty obvious. And that was at a key support level. So the high of this December 23rd week price probe. So that was a good sign. This obviously helps explain some of the strength that we had on Friday, and I saw room for that to go higher. However, when I looked at the 60-minute chart, I saw that we're kind of in this key zone, right? So if I squish up my chart, you can see that price came back to this old bottom at 4060.75. That's the February 10th low. And when it did that during the overnight, it pulled back, and as per an advanced forecast, it actually formed a short-term low. So this was a good sign, and then we sort of had the bounce up from that level. The thing is, the moment I saw this, okay, my 23 plus years of experience that I do have a systematic approach and tool for, okay, it's got the word skinny in it. This all told me that for today, most likely, we're going to end up in a short range here, at least in the first 30 minutes of the day, that we're not going to get much farther up above this 4062.5, and that we're not going to push much below this low that we had early in the morning. So there's going to not necessarily be this like strong opening market move, but how do I get my target out, right? Because I want to make $1,000 a day if I can and see what opportunities the market gives me. Now for me, the caveat is I don't want to have to sit here all day to make that $1,000. I want to be able to do it within 30 minutes. So bringing this down to the 3-minute chart, you can see that out of the gate, so here was the market open, okay? So this little red bar here was the first candle starting at 9:30 Eastern. It has been a very choppy morning. And if you just look at the 3-minute chart, you would say, okay, bullish tilt, still forming higher lows, but it's kind of easier said than done, right? There's a lot of chop in here. So I'm going to go to the 15-second chart and show you some of what I did that was based on the 15-second chart and the 3-minute chart. All right. Now to do this, I'm going to turn on chart trading. Okay, so now let's look at the action and what unfolded. Now I have my own notes of my trade ideas as I take them. Guys, the most important thing for you to capture while you're trading, okay, is why you're making the trade. Jot down the reasons, type them after you put the order on, just capture it in the moment because it's very easy to forget later. Like I'm looking at this chart that I just traded over the past 30, 40 minutes. I can't remember exactly why I made these decisions. That's where my notes help me. So let me bring those over too. All right, so now I've got my notes and I've got the screen here with you. So at 9:28, before the market opened, I decided to sell because I had a bunch of things. Like I said, the 60-minute chart staging a bull-bear RSI face-off, the bearish kind at a key level, okay? The 3-minute had room to trade lower to support at 4054. I saw this as a major important support because of a few things culminating in that area, okay? And I also saw a low-risk candle where I could enter that trade. And the 3-minute chart had a forecast that was coming in, again, for that 4054. So basically, I was convinced that this move here, the early morning move of the day, was going to be longer and take me down further. So you can see in the 15-second chart, it did not. So I got my first 2-point exit, but then it also took me out at 2 points max loss. So that's a strategy I have where I take one contract off and then the other contract, I immediately reduce the risk. So that trade was essentially break even. Okay, I just paid commissions. All right, after that, I went short again. Now you might look and say, why would you go short here? Well, here when I went short, my reason was it was a low risk area to sell based on what the 60-minute chart was doing and a sort of failed test of this 15-second price spike. So as you can see, that yielded some wins. Now the first contract gave me my 2 points, but the other one I got caught up in all of this sideways mess and I decided to get out when I realized this was consolidation and I didn't know if it was going to break higher or lower. And it's good that I did that because you can see I spared myself from being short while all of this business unfolded, okay? So once the market started breaking higher, I was like, all right, let me buy, and this returned to this old bottom because I thought the journey to 4070, right, my key 60-minute level and 3-minute level was continuing. So I bought on a return to this old top at 4063.5, got 2 points, but then immediately got stopped out 2 points. Again, with the sort of break-even trade. So after having 2 break-even trades and 1 winning trade, I was like, okay, this market is a little choppier than even I anticipated. So I'm going to have to do more short-term thinking. And this is where a lesson from my dad came back loud and clear, all right? So my dad had taught me, when I learned trading from him since I was in my early 20s, that when you're short-term trading, if you have anticipations about selling higher than where the current market is, or buying lower, and it's a significant part away and you're in a choppy market, you really should entertain the idea of taking the trade that's in the direction towards that action level. So here's what I mean. So on the 3-minute chart, okay, I saw this big red candle form. So if you kind of put yourself in the moment, because of course hindsight is 20/20, okay? But if you put yourself in the moment, I think we can all agree that if you saw this red candle, you saw this bull bear RSI face up that had a bearish implication, and we were still, hanging out at this key 60-minute and daily level, the old bottom from February 10th, all of that would make you think, oh, this market's going to just fall from here. Look at this giant red candle, right? So I thought, okay, well, what's the middle of that giant red candle? And I looked it up, and it's 4062.5, which is very close to 4062, the bottom from the prior candle. So 4062 to 4062.5, I was like, ooh, that's a good area to sell. But then, my dad popped in my head, his voice, and it said, okay, Hema, if you're planning to sell up here and the market has already moved lower, why not buy in between? If you're that confident that the market's going to rally to your ideal sell point, why don't you just buy in the middle, right? So that's what I did. I didn't think about it too much. I went ahead and bought using still limit orders, okay? That way you control your risk and your slippage a little bit, but I kind of acted at market. So this was a trade where I didn't have like a predetermined level. I just realized if I'm looking to sell up here, why not buy here? Because this is where the market was. And then it just became this whole sideways thing. And I realized, oh, this is looking way more like reaccumulation, okay? So accumulation is when bull participants in a market are coming in and buying up shares or contracts. And they're not doing it for a choppy sideways move. They're getting ready to really take the thing higher if they can overtake the bears, right? So I realized was like, oh, this is reaccumulation. I am long here. I'm going to stay that way. But when it gets up to 4062, do I really want to sell? See, that's the beauty of that framework that my dad gave me, because it allowed me to take advantage of this move. So it did start to break higher. I got my first 2 points out. Then the market corrected. It got choppy, but I decided, you know what? I'm just going to let it ride. I'm going to make the market convince me that at 4062 or 4062.5 it wants to go lower. But it didn't. None of this was convincing to me. In fact, it came all the way up to 4064. Now here, I could have optimized my exit, okay, even I'm looking at how I can improve what I'm doing, by exiting at a 15-minute price spike, which would have given me either an exit at 4064.25, or look at this beautiful retest later at 4065.25, right? Could have exited on either of those. But instead, I exited on a trailing stop. And all of this together, guys, okay, 2 break-even trades, 1 small win and 1 bigger win created $368 at the end of everything, okay, after commissions and all of it, in 30 minutes of actual live trading time. That does not count my prep time, okay? So I want to show you that, like, sometimes it's not going to be clean and beautiful, and you're not going to have these stair-step uptrends or downtrends. But you can take all of these different techniques I teach you. I mean, I touched on so many today, right, that you can dive into in your HEMA Ready portal. I used price action in terms of candlesticks and trends. I used momentum understanding in terms of the bull bear RSI face-off and then all the more complex iterations of that. I used forecasting to help me understand where things might be taking off from this low formation, okay? So I hope that's helpful to you, okay? I want you to understand that having messy, choppy trades that don't look so beautiful on the chart, that doesn't matter as long as you're following your rules, your risk reward, and getting the results you want. And if on a choppy period of time, you are not able to squeeze your daily target, that's okay. There's no law that says you have to hit it every day, okay? But the important thing for me was I quickly realized that this is a very choppy environment for me, and I kind of was like, all right, I think I'm good now, and let it go. So there you have it. My trades for today: small wins like this one, break-even trades like these, and then the bigger win of the day that kind of carried most of that 350 plus profit. So how did I do this, right? What was my framework for getting going? That's where my favorite trading tool comes in. It's got the word skinny in it. There's a reason for that. But that is the tool that I created that allows me to be able to make trades like this and do this kind of thing consistently. And I share this with the tribe. So keep an eye on your email for invites to a session I'm doing that'll share more about my tool. And if you have questions, just shoot us an email at support@himawari.com, and I'll catch you on the inside.